Let's get straight to Sebastian Evans now, Fund Manager at NAOS Asset Management, who joins me here live in Sydney. Good to have you with us.
Thanks.
Difficult market, as always, at the moment, it seems to be. What are you looking at right now?
I think we try to focus on the long term. So I think as short term, a lot of people are focusing on the so-called noise. But I think if you can look through the problems in Europe and especially in the States, we've started to see the US come through, may or may not be a recession, but I think if you can focus on the long term and look at stocks that are going to benefit over the next sort of 2 to 3 years, you can find stocks that are on extremely attractive valuation, and that's what we're trying to do and put our money there. So we're looking to focus on higher quality companies.
Isn't that pretty tough to do? I mean, as an investor, you know, we're talking about what could be a fairly rocky 18 months to 2 year period, if in fact, as you mentioned, the US does go into recession and we don't get a resolution to the European debt situation.
Yeah, definitely. So I think that's what you've seen a lot of the steam come out of sort of the more speculative stocks, so your resources stocks or even financials to a certain extent. So what we're trying to do is find stocks that aren't as attached to the macro environment. So in one case, life sciences, or just companies that are in the growth stage of building up. So things that aren't tied to interest rates or what it may or may not be.
Yeah. Okay. All right. Now, focusing on the smaller side, where do you see the opportunities? Run us through a couple of plays.
Yeah, I think it's very stock specific. So I think I mentioned one of the life sciences plays initially was tissue therapies. So once again, a company that's got a product that's going to a market, it's a large market, they're in the process of signing a distribution agreement soon, fully funded, and once again not tied so much to the macroeconomic environment, besides reimbursement ultimately. But another one we focus on is Yellow Brick Road. So as I mentioned, a business that is in the stages of launching a new product, so a new business. It's all about financial planning, investment management, but it's unique in the fact that it's going with a store, so it's going to be on your local corner store, I suppose, for a financial investment company.
You obviously believe that strategy will work.
Yeah, exactly. And
it's a little controversial though, right?
Yeah, no, I'm sure it is, but I think you're backing someone like Mark Bouris, where I'm sure everyone has their own opinions, but he is definitely proven, and the team is proven. So the team's back together again. It's fully funded. Channel 9 owns now 20% of the business. So in exchange for that as well, they've got marketing dollars, so advertising. So you'll see The Apprentice, which starts in the next 5 weeks. So it'll be prime time, 5 nights a week for 6 weeks. So things like that to build the brand awareness of Yellow Brick Road, I think it'll really start to see a lot of traction. You're paying very little for it.
Yeah,
anyway.
And once again, you're focusing on management, right?
Yeah, exactly. And yet in these small companies, they're capped at not a lot, but at the end of the day, the only thing you're really backing is key management teams, and that's where a lot of the funds goes, unfortunately.
And you've got another medical company here, Riva Medical, which is RVA.
Yeah, so once again, focusing on management, a guy called Bob Stockman's the managing director. He's had 8 life sciences plays. This is his 8th. 7 have been taken out by the likes of J&J and Roche. And once again, if you look at their board, they've got Key, the MD of one of the directors of Goldman Sachs, for example, sits on the board of Riva, but they're developing a stent, a heart stent that's biodissolvable, so it dissolves after a number of years, as opposed to a metal stent that stays obviously in your arteries. So the risks of any issues associated with that stent are reduced when it dissolves.
Are you also buying into this company then because it could be taken out?
No, we don't. We'll never invest on a company based on that perception alone, I think.
Is there a premium in the share price?
No, definitely not recently anyway.
No. So it's too early to be thinking about,
yeah, exactly.
I guess, that side.
Yeah, so I think there's only 4 players now. J&J, it's a $5 billion market made up of 4 main players. One of those players is on the register already. They subscribed in the IPO, so they've put their money where their mouth is. So it'll all come down to the pilot trial, which goes into humans next month, and you'll see those results.
When it comes to these smaller players, Sebastian, is there anything that you're particularly, backing away from? Are you doing any shorting in the market?
Yeah, look, I think if you're going to short, you want companies that are relying on funding, so external funding, equity raisings. They have an amount of funding to get them to a certain point of view, so 3 to 6 months, whether it's resources companies, mining services companies, capital-intensive companies. Funding in equity markets, as you've seen, especially with IPOs, I can't remember an IPO in the last 6 months that is above water, and they're all significantly underwater. That will dry up. I think you've seen that dry up significantly. So any companies that require funding, any companies that require their marginal producers, so marginal commodity producers with commodity prices, there's huge leverage on the way up, but the leverage on the way down, I think we don't really have to remember too far back in the GFC where a lot of these companies went broke.
No, just a few years ago now. Absolutely. All right, Sebastian, really good to see you.
My pleasure.